Good morning to all of you. We have some really important news to share with you, so please read it over. XRP has finally received a settlement offer from the Securities and Exchange Commission, SEC. Some people have theorized that the XRP lawsuit is about to conclude. Before the U.S. Securities and Exchange Commission filed the complaint, Stuart Alderoty, the chief legal officer of Ripple, informed Ripple about the settlement offer. The Securities and Exchange Commission indicted Brad Garlinghouse, the company's CEO, and Chris Larsen, co-founder of Ripple, on December 22, 2020. Among the accusations made against them is that, over the relevant timeframe, they solicited more than $11.30 billion in unregistered digital assets. The release of securities, the Central Securities Commission, CCE, requested that Ripple give crypto compliance a brief window of opportunity to become a client and publicly recognize that XRP was a security asset. Furthermore, Ripple was very much encouraged to take part in the proposal. Companies involved in the cryptocurrency space in the United States have long argued that the current securities laws inadequately account for the unique qualities of Bitcoin assets. The Securities and Exchange Commission, SEC, hasn't done much to develop cryptocurrency-specific regulations. On the other hand, the court determined that the attractive settlement requirements for XRP to be classified as a security were flawed. In July 2023, the court and elicitors concluded in the summary ruling that XRP was not a security with regard to retail sales. This was the outcome of the court's ruling. The allegations filed against Ripple's chief legal officer, Larsen, and chief executive officer, Garlinghouse, were deemed untrue, according to the Coin app. The SEC never designed it with regard to compliance with cryptocurrency. Alderoty stepped up his efforts after learning that the Securities and Exchange Commission had never created guidelines for crypto compliance. Since the XRP lawsuit was first launched 3 years ago, the U.S. Securities and Exchange Commission has been unable to demonstrate industry compliance. Two instances are Binance and Coinbase. As part of its first enforcement strategy, the government agency filed lawsuits against two of the most well-known Bitcoin exchanges, despite the fact that these companies were receiving harsh criticism and were fleeing the nation. Another piece of news is that the cryptocurrency exchange has filed to become involved in the ongoing legal dispute between Ripple and its claimants. This is a significant turning point in the ongoing legal battle. This step is in response to a court ruling that obliged U.S.-based exchanges to disclose private transaction data, including the identities of XRP traders. In the Bitcoin industry, Kraken's involvement in the Latch v. Ripple lawsuit marked a turning point for user privacy protection. The firm's position on user privacy was represented in this intervention. The exchange has taken a stand to protect the data of its users, with a focus on the ramifications of adhering to the exchange's data disclosure order after realizing the importance of privacy and the risk involved in revealing sensitive information. Kraken insists that it will remain unbiased during the judicial battle. The exchange has chosen to appeal this decision, demonstrating how seriously it takes the decision to uphold its clients' confidence. Kraken claims that forcing the disclosure of private transaction data could damage the exchange's relationship with its users. The true objective here is to maintain Kraken's positive reputation in the Bitcoin industry and to ensure everyone feels secure, not merely to protect traders individually. Regarding the legal argument, it is unclear whether XRP is best understood as a cryptocurrency or as a security, given the lawsuit that Zinov is leading. The main point of contention in the U.S. legal system revolves around how XRP is classified. Bit by bit, Ripple refutes allegations that it is trading unregistered securities and contrasts XRP with well-known cryptocurrencies such as Bitcoin. With Kraken's existence, an already complex legal matter becomes even more so. The exchange has placed a strong emphasis on protecting user data and privacy in its attempt to appeal the court decision. By taking this action outside of the Ripple case, the company is demonstrating its commitment to its clients and raising awareness of more significant privacy issues. It is possible that Atkins' choice to get engaged will have consequences. The exchange's choice to disregard the court's application, it might act as a template for other platforms to follow, which would increase industry readiness to safeguard Bitcoin users' privacy. Furthermore, it poses serious challenges to the balance between individual freedoms and legal obligations, which is especially problematic given the dynamic nature of digital assets. The way in which the Bitcoin sector is regulated may change as a result of this involvement. The success of Kraken's initiative may persuade authorities to take user privacy-focused Bitcoin transaction structures into account. Maybe, as a result, decentralized exchanges and privacy-focused services will become more and more popular. Kevin's contribution to the Ripple controversy extends much beyond simple legal maneuvering in terms of safeguarding Bitcoin industry customers' anonymity. This is a turning point that ultimately compels other exchanges and authorities to reevaluate their openness and data privacy practices. This action has the potential to fundamentally alter how digital assets, including personal data, are managed and set new standards for the confidentiality and trust of users. The XRP price is still bouncing below a significant resistance level, but null will cause a stir in the cryptocurrency gaming market. The main feature of the platform is a game called Play to Earn A2, which is all about mining for minerals in the face of strong opposition. XRP is still having trouble, even if the cryptocurrency markets are gradually rebounding. Since XRP hasn't been able to break through a certain level of resistance as of December 19, analysts have suggested that there may be evidence on the blockchain indicating that the cryptocurrency is losing momentum and may be about to reverse course. The current price of XRP is at the 60-cent support zone, which traders frequently monitor to forecast the cryptocurrency's likely future behavior. This is true even though market trends are usually quite static during the Christmas season. On the other hand, XRP shows no discernible bias in either direction. This is because XRP's significantly lower trading volume prevents it from participating in the overall cryptocurrency market boom. This, in Cap's opinion, is one of the main things preventing it from developing further. Last week, XRP saw a sharp decline in daily trading activity as prices were rejected at 68 cents. XRP had broken through critical support, but there was still a $48.44. Because the price of the cryptocurrency has not decreased significantly, investors still have faith in it. The possibility of a rebound from the current levels may rekindle interest among potential purchasers, but XRP would likely require some positive news or new collaborations to boost investor confidence sufficiently for a bullish turnaround to take place. Given the C Securities charges against other cryptocurrency projects, attorney John Dean, the creator of crypto law, has made additional remarks regarding a potential settlement and the ongoing issue between Ripple and the SEC. In a recent interview, attorney Deaton made several conjectures with Thinking Crypto. Deaton said he doubted the agency's ability to work out a settlement with Ripple, citing the Supreme Court's continued interpretation of ADA Solana and Matic as investment contracts. In addition, attorney Deaton stated that exchange-sold XRP is not regarded as a security. If the SEC determines that Cardano is a security and XRP sold on exchanges is not, I do not see it occurring. As you may recall, in June the SEC declared that Coinbase, which allowed the trading of assets deemed investment contracts and ran an unregistered securities exchange, had violated U.S. regulations by classifying over 10 cryptocurrencies as securities. These included R, Solo, and more. 1 month later, a federal court in New York granted the eagerly awaited summary judgment in the Ripple case. The court decided that XRP alone does not qualify as a security. Furthermore, the court found that sales of Ripple programs and other distributions do not qualify as investment contracts, notwithstanding the SEC's assertions to the contrary. The SEC may elect to appeal the ruling following the release of the final decision. Some legal experts believe that this will settle with Ripple's, while others do not believe that this should be interpreted as a recommendation to engage in any specific trading activity. We take no responsibility for any investments made based on the information presented in this video. Before making any investing decisions, it is strongly advised that you conduct independent research and speak with an informed specialist. That's it at this time.